Hello everyone. Let's start the session. There was a little technical glitches. Sorry for that.
Good afternoon, ma'am.
Yeah, good afternoon.
Good afternoon, madam.
Yeah, good afternoon. Just give me a second. I'll be sharing the screen.
Okay, ma'am.
God. I was not audible. Then whatever I said, I think it was not audible.
Yes,
Am I right?
ma'am.
Oh my
Yes,
God.
ma'am.
Oh, I just now saw the message in the chat box, then realized. Okay, okay, Ray. I was thinking I was inaudible and I could not see whether you were audible or not. It's okay,
I thought
fine.
you
That
were in signals, ma'am. That's why
a
I said.
little technical issue today. It's okay. So that's all about theoretical part. Not to worry much about that. And advance payment of tax and deduction at source. Whenever you are paying advance tax and tax deduction means before paying the salary by the employer and the tax is deducted at source. That is called the tax deducted at source. So liability for payment of advance tax. As an employee, we all pay the advance tax every month. We keep a cut of some amount aside for the tax payment. Actually, the tax file return will be done in the month of July. But still, we make a provision that at a time not to have that burden. We keep quarter wise. We will submit it. That's all about the theoretical part. So you can just look at your installment of advance tax means how companies they have to pay means 4 quarters will be there. So on or before 15th June they have to pay 15%, by 15th September 45%, and 15th December 75%. By March they have to pay the total tax amount. And for all assessees other than company means who are not companies, like all individuals, maybe anything. So they also have a quarter, that is by 15th September they have to pay 30% of advance tax, and by 15th December 60% of advance tax, and 15th December the whole 15th March they have to pay the whole amount of tax. Interest on refunds means where an amount becomes the due to the assessor means as an individual, as an assessee, we might have kept every month extra means maybe the tax liability is only 50,000, but I was paying advance tax more than that. So when it came to March, it has shown that I paid 1 lakh instead of 50,000. I paid 1 lakh, so extra 50,000 means here the income tax department is due to me, means to an SSC, the income tax department is due. That is called a refund. And they have to pay immediately. If it is not paid, then there will be an interest that will be calculated, and income tax department will be paying interest on that refund to the individual. Interest for default in payment of advance tax means if the income tax actually, every individual has to pay the advance tax, and if they fail to pay that advance tax and whatever paid is less than 90% of assessed tax, then there will be an interest of 1%, which they have to pay on whichever the default of payment is there on advance tax. Just look at here, assessed tax means the tax under reduced by the amount of tax deducted or collected at any source, which is subject to such deduction or collection. So here, whenever as an SSC, it's not like that I'll be paid at a time tax. No, every month or quarterly, I have to means it's not me. The in the organization where I am working, the organization has to submit it, has to give its quarterly to the income tax department. But how it can give when I can make some amount of my salary kept aside for the advance payment of tax. And in the case, if I'm not paying the advance tax, and if I paid less than 90% of the assessed tax, then I directly have to pay the interest on that. So interest for deferment of advance tax. If it is not paid, then these are the interest rates that will be collected. Next, deduction of tax at source. So income tax department had made it compulsory obligation for certain persons to deduct income tax and surcharge for certain payments. In case if you are not fulfilling that compliance, or if you are not fulfilling that statutory obligation, then that assessee or that person will be liable to penalties and prosecutions. Means legal action will be taken on them. And deduction of tax at source from different sources of income. As we know that we have different five sources of income, as we have discussed, that is income from salary, horse property, and like business and profession, capital gains, and other sources. Now, under which head, how the tax is deducted at source, let us understand that. So first one is deduction of tax at source from salaries. So employment under more than one employer during relevant previous SSC has must furnish that. For example, I worked for 7 months at one organization. After 7 months, I moved to the some other organization. So as an SSC, I have to furnish that uh, for how many months I received salary, and also to the present employer also, that declaration has to be given. And in any case, if I'm receiving any arrears of salary, that has to be paid, who are working in government organization or private one, that they also entitled to receive a relief. Next, income from any other head means any salaried employee can furnish details of his other incomes to his employer, and employer can deduct tax at source. So for example, I'll tell you, I receive an income from salary. So here every month my employer will deduct some amount. Every month some amount will be deducted, that is the amount which we have given, that this much should be deducted. So every month my employer is deducting, and the remaining is paid to us. And when it comes to the February or March month, where I have a total amount of tax has to be paid, at that time it will be checked, and the remaining will be paid by the employee itself. Next, deduction at of source at source from deduction of tax at source from income on securities. So here, the persons responsible for paying the interest on security is liable to deduct. For example, I have invested some investments, or I purchased some debentures or securities, or on any bonds on which I will receive interest. So before I receive the interest, the person who is paying that interest to me has to deduct the tax at source. So before paying the amount to me, that interest amount, the person should deduct the tax which is applicable to that one. And for that, these are the different rates that are allowed. For example, National Defense Bond 9.25%. That is mean different years it is, and National Savings Certificates. For this following securities or bonds, there will be no tax at source. There will be no tax on. For example, if you are investing on National Savings Certificate, there will be no tax on the interest whatever you are receiving. So these are the interest. If you receive from this, there will be no tax on this. Deduction of tax at source from dividends means, for example, as an SSC, you might have invested in some company, and from invested or you have purchased some shares, and you are receiving dividend, and whatever dividend you are receiving, that will come under income from other sources, and it may be private sector or public sector, or whichever the company you have invested. Before paying the dividend to you, the tax will be deducted before paying to you. So that is called tax deducted at source. Before receiving only, tax is paid. And if the following conditions are fulfilled, then there will be no tax deducted source. The dividend is paid to an individual or any national stock exchange, shares are issued by a company. So if these following criteria has been fulfilled, then there will be no tax at source. Next, similarly with that of deduction of tax at source from interest other than interest on securities. So if you are receiving any interest which are not the securities, then in that case also there will be tax deducted at source. And deduction of tax at source from lotteries, crossword puzzles, and winning from horse races. If any amount is crossing 5,000, then the tax will be collected. and the value will be grossed up, then on that tax will be deducted source. So these are the different incomes on which tax is in whatever income we are receiving on the tax is deducted at source itself. If you want, we can look at some problems. You can just look at this. Find out the amount of interest payable under Section 234C in the case of X Limited for the assessment year 1920. Income declared as per return and advance tax paid is amidst 4 quarters they have given: June, September, December, and February. They have given 4 quarters. They have paid the total amount is 1 lakh 60, 1 lakh 90, 2 lakhs 15, 16,000, 17,000 change they have paid. So now in the above case, amount of interest will be determined under income is declared as 11 lakhs 82,086. So total, this is the advanced tax paid. So first we have to find out what is actual tax he has to pay it. Just look at it. Tax on 11 lakhs 82,860 comes to 3 lakhs 54,855. And if you just look at here, so total tax payable is 3,65,504. But advance tax paid is how much? Just look at you. Till June it was 38,800 and September 16th also. Just look at here whatever the tax they paid. So all together it was paid. So advance tax paid up to December is 2,07,250 they paid. So still shortfall is 66,878 has to be paid. So so they have not paid till 90% of tax. So on which they are calculating interest of 1%. And next one is recovery of tax, penalties and prosecutions and appeals. Means if any SSC did not did the regular assessment every year they are not doing, and they are not the tax is collected by the way of advance payment and deduction its source. And after completion of that regular assessment also, if any tax or penalty is found payable, means still SSC has not paid. Either it may be tax or it may be interest or any penalty which SSC has not paid. And the assessing officer is required to serve upon the SSC notice of, so there will be a notice that will be issued to the SSC. So how to recover that tax? How to recover the tax from the SSC? So recovery of tax, what are the different modes of recovery of tax? Refund of tax, tax clearance certificates, double taxation relief. If you are paying double, what happens? And as an SSC, if you have some appeal, you have to appeal it to, means your part you are paying correct, but still you receive something else and you want to complain it. How to complain it? That is appellate authority, which is available at tribunal level, high court level, supreme court level. So that all we will be discussing here. And modes of recovery of tax under the AO may, that is assessing officer, may start recovery proceedings under any or any one or any ways of them, like either attachment or sale of any as movable or immovable properties are there, he can sell that, or by issuing the arrest orders of the SSC, he can do anything. And other modes of recovery apart from this, how can he recover the tax from the SSC? Means either by sale or seize of the movable properties, or recover through state government, or through his salary account they can seize it, or the post office account or bank, wherever whatever savings do they have, through that they can seize it and they can recover the amount from the SSC. Recovery of penalties, fines and interest and others, means any sum imposed, either means some amount is imposed by either by way of interest or fine or any penalty under the Provisions Act, and it can be recoverable in the manner provided. So, what is the refund of tax? For example, I have paid an extra tax, an extra amount, where the tax paid by necessity is more than actual tax payable. For example, I paid 1 lakh tax, but it was when I was what is my total tax amount? It was 80,000. It means I paid 20,000 extra. So whenever the SSC tax paid by SSC is more than the actual tax payable, then the SSC has the right to claim the refund of the excess of amount. So once AO is satisfied, means once assessing officer is satisfied about excess paid amount, then in that case, he can allow the claim as refund. So interest on refund, if refund is not paid immediately, so at that time the interest can be charged and the assessing officer has to pay the interest on that. In case a person in India at the time he's moving to the abroad, then he has takes tax clearance certificate. So he shall not leave the India without having the following certificates: that Income Tax Act 1922, excess profit tax, wealth tax. These all certificates has to be provided. Means if he's a business person or an income earning person is. So if I want to complain, then we have a structure where Commissioner of Income Tax is available. Means if you are not satisfied with the judgment of the tribunal, then you can appeal it to the High Court within the 16 days of the receipt of order of the appellate tribunal against. Means if you are not satisfied with the judgment of the appellate tribunal, which is at the district level, then you can apply to the High Court by raising that, and you can accompany amount that has to be paid. Just look at this table: defaults and penalties, minimum penalty and maximum penalty. ఉంటా. కాలే కాలే కాలేదంటే గమ్మున మోష చక్క నుస్లకు
Sorry, due to technical glitches, there was an issue.
Okay, ma'am.
Yeah, indirect taxes. So till now we were discussing about the direct tax which were paid directly to the government, like income, whatever income we are earning, we were paying tax. But there is a term called indirect tax. As you all know that, maybe I hope you all are earning people. If not earning, let's have a small discussion. Or the student of intermediate student who regularly goes to college, does he pay any tax to the government? Leave about
No.
this. Do we all pay the tax to the government? Every
No.
individual tax to the government, right from the child to the old person. Do we are paying? Are we paying tax? Yes. Does a small child of 5 years or 10 years, is he paying any tax to the government?
No, ma'am.
Yes or no?
No, ma'am.
No. See, but whether we knowingly or unknowingly, may not be they are not paying direct tax because they are not earning any salary. They are not having any extra house to earn income from house property, or neither they are doing any business, nor they are doing any profession, or nor they are selling any land or building where they can get capital gains, nor they are investing any shares. But as an individual, we all pay the tax to the government. Right from
GST.
right from the morning we get up to
Yes.
brushing till we sleep in the night. Every product we are paying tax to the government. Means not only to government, we are paying tax. So that is
Okay.
called indirect tax. And indirect tax, we do not pay directly to the income tax department. We pay indirectly. Means in the purchase value only the tax has been collected by the seller, in turn, which was already paid by the seller to the government, or the person from where they paid purchased that products, they have paid the already tax. So here, as an individual, we do oftenly in our daily life, we are paying tax to the government, not only from the direct, it's indirect also.
Okay.
So we will understand what the difference between direct and indirect taxes. Just you can, it's a brief introduction they given. This is taxo. Tax means Latin word, means taxor, which is taxo means estimate, appreciate, or value. So earlier there was no tax shall be levied or collected except by authority. No other individual can collect the tax. Only the income tax department had that authority. And these are the essential characteristics of a tax, because actually this might have been discussed in the early class only. Why we are paying tax? Because to our regional equality
రోహిణ
or
నిలిచి పంపుతా నేను లేచి రాకపోతే నన్ను
and objectives of taxation system.
ఇంతసేపు
These are
అడిగిపించుకుంటుంది ఆమె నువ్వు ఆడ డబ్బా పెట్టేలోపు నేను వెనుకొస్తా
yes,
కాలేయ అంటే
please.
మొడ్డ పట్టినక వేస్తున్నావు నాకు పిక్క నొప్పులు వేస్తుంది లెఫ్ట్ వితల్ది
Kalyani, mute yourself.
మీరు తినండి అంటది
Yes, please. Who is that?
Kalyani,
Excuse
mute
me.
yourself. Class is going on.
And tax versus fee. So, what is the difference between tax and fee? Tax is compulsory charge or payment which is levied by public authority for public purpose. Whatever tax we pay, that has been in turn used to the public only. And you can see why, how means you can see public transportation, public hospitals, institutes, offices. This all works for the public only. And even you can see in government institutes, there will be very less few to the students who are pursuing the studies. Why? Because they cannot afford to study in the private institute where they have to pay lakhs or some thousands of fee, which they cannot afford. So to provide equal opportunity or right to uh, education and right to education for all, and to have equality, uh, tax is collected, and fee is like a payment to defray the cost of some recurring service. So they given here the differences between tax and penalty, tax and fee, and tax and duty. So cess means, if you can know education cess, we call cess means tax collected for development of specific department or specific field. So now we can see that educational cess or secondary higher education cess means the tax is collected only for the improvement of education system. So direct tax versus indirect tax. Here you can see this. So direct tax is a tax where the tax is directly impacting the same person. Whoever is earning on that person only taxes. For example, if I'm earning in salary, so income from salary means only have to pay the tax on that. The tax is borne by the assessee himself. Like example, income tax. Whereas indirect tax is a tax where incidence is on the assessee. Means the impact is on the consumer only. Whenever we are purchasing any product, the tax impact will be on the customer only. But how we are paying tax? Tax is passed on one consumer to the final, like in form of excise duty or GST. Now, and direct tax this is imposed on person. And amount of tax is determined directly on the base of taxable income under direct taxes, whereas indirect taxes amount of tax is determined indirect. And here under direct taxes, collection is difficult tax collection. Why? Because okay, leave about the government organizations. Think about the small organizations or private sector employees who may not have direct access of their accounts by the income tax department, and we do not know how much they are receiving the income. So it's highly impossible, or it's a very tough task to make it that all the individual or all the SSC pay the tax. Whereas indirect tax, it's very direct, because whenever you purchase some product from shop, it means directly you're paying tax. There is no like any tough task. If you're purchasing any product on that, but every product we are paying tax to the government. Now, under direct taxes, not all the people are affected by direct taxes. Why? Because we have some exemption, we have some sub slab rates. If your income is above and uh, above the limit of 2.5 lakh, then only your excessive amount is taxable. But whereas indirect tax, it's not indirect tax, it's not like any product you purchase on the directly you have to pay the tax. There is no exemption that you are some auto driver, so you are some faculty, so only you have to pay. No, it's not like whoever consumes that product, every person, irrespective of their class, irrespective of their income class, everyone has to pay the tax. And advantages and disadvantages of indirect taxes. For our advantage of indirect taxes, we have high revenue from indirect taxes, because everyone 75% of tax is collected from indirect taxes only. Why? Because we consume every whatever products we consume, everything on which we will be paying tax, and easy to administer and collect. Why? Because the manufacturer has to pay the tax while manufacturing, so it's easy to collect it. And tax evasion, there is very very less chance or very less opportunity to evade the tax. Means evasion means not paying the tax. Channelize industrial growth, and also what happens here, uh, and supporting the areas where it requires, so there they will be reducing the tax liability. Either that goods will be given exemption, control over wasteful expenditure, and psychological advantage to the taxpayer. What is happening? See, when we are earning some income, when I'm receiving some salary, I'll think that, Are, why should I have to pay when I am hard earned money? I am working for 1 month, and why should I pay tax to the government? Why should I pay my income? We'll get that question in our mind. But when you're purchasing product, we never think like that. We never even bothered about that. Whatever products we are purchasing, we are paying some tax on that. So our psychological behavior is, we are not paying any tax when you're purchasing product, we assume, but it is already paid and it has been collected from us only. Disadvantage of indirect taxes, we have regressive in nature, reduces composition of goods, protects the local industries, smuggling may be encouraged. So what happens, because of increasing the local selling of product, some, for example, some product is very costly, but it is a very important and necessity for an accessory for a customer, but it is very so costly, they are unable to afford. So what happens, automatically there is a chance of getting some cheap products in the markets, either by sub smuggling into the country. This chance may happen.
And here functioning is, we have at three stages, that is legislative, administrative, and judicial. Legislative means which is parliament state, that is Lok Sabha and Rajya Sabha. And here president will be the head of that state. And parliament makes its own laws for the governance of that country. And executive means the people who actually execute that work, like prime minister will execute that and his cabinet ministers. And in judicial means the courts will look out, that the Supreme Court will look out whether the powers of the individual or the rights have been not curbed. That will be checked. Next, taxation under Constitution of India. We have different articles. And you can just look at here. These are entries relating to taxation. Limitation of taxation power. So this is the basic introduction about the indirect taxes. So under indirect taxes, as we have discussed, that this is about the tax which is paid by the customer unknowingly. So earlier we were having different types of taxes, like we were having sales tax, VAT, we were having excise. So like this, we were having a n number of tax and duties, but to bring it all together, we have received a new tax system that is called GST, Goods and Services Tax. So here we discuss about the GST. To have uniformity, about the taxation. To have uniformity in the taxation, a new tax system has been evolved in India in 2017, that is 29th March 2017, that is GST, Goods and Services Tax, is an indirect tax which has replaced many indirect taxes in India. Though it came in March, but its effect came in 1st July 2017. And this law has replaced many indirect taxes or indirect laws. They were saying called the entire country. So pre-GST means before the introduction of GST, we were having n number of taxes like central sales tax, value-added tax, and there was more chance of gambling, betting. This all were taking place. But when GST came into existence, it made very clear that the tax is levied at every point of sale. Means in case of intrastate sales, central GST, state GST are charged. In case of interstate sales, are chargeable at integrated GST. So we have integrated thing, and we have both central and state also. If you whenever you go to any mall or whenever you purchase some grocery or whenever you visit some restaurant, just check the bill. They will give GST as well as in that CGST will be there, SGST will be there. CGST means Central Goods and Services Taxes, and SGST means state. So here again, it's a comprehensive multi-stage destination-based tax, and it's a very value addition. So actually it was recommended in 2005 itself to implement the GST in the place of CST and VAT. So this is all about the history of the GST, how it has been introduced, when GST bill has been passed and it got approval. So first phase was introduced when Prime Minister Atal Bihari Vajpayee has set up a committee about the GST law in the year 2004, but it came into 2017. So here you can just look at here.
picture showing the finance means hitting the GST bill at the event organized on the occasion. That is headlines. This was came in the Hindu newspaper. And challenges in this designing the GST. And advantages, and that the first one is cascading effect means paying again and again tax on the same product that is been removed. So there is a chance of these questions coming into the exam also about the history of GST and its advantages and disadvantages and its journey also may be asked.
Okay, ma'am.
And even we'll try to understand how means before GST there was a tax, as I said, that CG. And in the GST also, whenever you purchase any product, you will have CGST and SGST. CGST means Central Goods and Service Tax. So what are the rules that are related to CGST? What is the composition? And what is the day effective date for composition of that levy of that all. So Central Goods and Service Tax Rules 2017, because we have CGST as well as SGST. So first we'll try to understand what is CGST. So these, if you just look at here, these are the rules that are applicable in the CGST are given below. The different notifications that have been given. And its composition rule, any person who has been granted a registration on provisional basis will be the member and who opts to tax paid under this. The composition and effective date for composition of levies from section 10, it talks about that. And conditions and restrictions for composition levy. So this is a composition is neither a casual taxable person or nor a non-resident taxable person. For example, if I'm an individual SSA, I will not be the not a taxable casual taxable person. So these are the conditions. And if you just look at your rates of composition levy, the category of registered person eligible for composition levy under section 10 is given in this below table. Means who are registered actually means manufacturers other than manufacture of such goods as may be notified by the government. Means if the only the goods which have been given by the government, and the rate of tax is 0.5%. And suppliers making supplies referred to in clause means this is the table that which has been given by the act, that is part 6 of schedule 2. And 2.5% will be taxed rate of tax, or any other supplier eligible for composition levy under section 10 and provisions of this chapter. Means any other product comes under this, they also pay 0.5% of the tax on this total turnover of the taxable supplies of goods in the state or union territory. So this is about the CGST composition. Next, we talk about how to get registered under GST Act. We were talking GST. Okay, as a manufacturer, if I want to get registered, what are the rules? How should I get registered under that? That we will discuss. So for that, first we have to give an application for registration. And after giving registration, it will not be given immediately. Verification of that application will be done and approval has to be done. And when issue of registration certificate means grant of registration to persons required to deduct its source or to collect its source. They have two options, either deducted source or collected source, or grant of registration to non-resident taxable persons. And also if grant of registration to a person supply online information and database access or retrieval access services are there from a place outside India to a non-taxable online recipient, or extension in a period of operation by casual taxable person and non-resident taxable person. and and also UIN number, that is UIN number, GSTN number we call it, that will be given to certain special entities only. And if it number is given, the display of registration certificate and goods and service type, GSTIN number we call it as. If you just look at on any shop which are registered under GST, they will mention it on their shop. GSTIN means goods and services tax identification number. On the name board they have to display it. And also the any amendments of that registration, application for cancellation of registration, there is a chance the income tax department may cancel the application. So we have certain norms or certain rules under which they will be cancelled, and the authentication will be done. So whenever you are applying for application, should have a PAN card number which is validated, and after successful verification, your PAN card number, mobile number, and email, a temporary reference number will be given. And when verification, they will look after whether the person or the organization you have applied for the GST number is a registered office or not. And issue of registration certificate. And remaining will continue tomorrow. And sorry for there was some technical glitches today, why I don't know. Or remaining we continue tomorrow.
Okay,
Okay.
ma'am. Thank you.
Okay.
Thank
Okay.
you.